Good morning, retail traders. I have my bear mask on, and that's the kind of attitude I have right now. I'm just going to look at the Dow Jones today and tell you where I think we're going to be heading. I'm going to go ahead and take this mask off, but I wear this when I'm feeling very bearish, and I'm bearish as could be. So I take that thing off, let my glasses defog. This is the Dow Jones. This is the monthly chart on a 20-year time frame. Now, I was watching the market back here in 2007, 2005, 2007, and 2008. And I predicted that we'd have this crash because of the political tension that was going on back then, that the fat cats were going to get bashed, and by gosh, the market pulled back pretty strong. I remember when it was at 12,000, 14,000, and it dropped all the way down to $6,469. And then I called this, by the time Obama would get out of office, I said this thing would run up to 20 grand. And bam, boy, she hit that 20,000 mark right before he left office. So we've had just a couple of times where things got real bad in this market. It was during that financial crisis, which they so-called a financial crisis. And then we had the COVID. And then we had that crash in 2015, 2014 that pulled back the market some to the 50 SMA. Then we hit the 51 during COVID. Now, I don't think things are any better now than I think they're a lot worse now than they were back during this Obama crisis. So I'm seeing the Dow Jones coming down and hitting this 51 EMA on the monthly chart. Now that also, I get another collaboration that we have this ascending triangle. So I always say look for another reason for that stock to hit, and that's that ascending triangle plus that 51 EMA. So I'm going to go ahead and call $26,596.58 to the penny off the top of this here triangle, and I think that's where we're going to pull back to. Or it'll bounce off the 51 EMA on that monthly chart. Now, if you look at the yearly, we're done with this one right here, so we're going to go to the yearly. The yearly, I have a support. We broke the year low, and that was at that 30,000 benchmark. I think if we would have stayed above that 30,000, we'd be okay. Also called this reversal here, and we ran up to the 200. So I'm thinking we're going to definitely come down a little bit more, and that first support is going to be right here at $28,657.67. So if we see that, that'll be a good thing. Now, I do know that the fat cats were wishing that we would go ahead and hold them 52-week lows, and that did not happen. We broke that this week. So if you pull up like the SPY, let's go ahead and go over this one more time. As I said, or as I think, we'll pull up the monthly again, the 20-year. As I think, we are definitely going to pull back to this top of this here triangle. And that'd be nice to hold. If things get real bad, we'll definitely pull back to this 18,000 again. Now, I called this back during 2019. I said, watch out, we might be pulling back to that 18,000 area, and that's exactly what we did. We nailed that to the penny. So keep a good eye on it. My next call is going to be this $26,596.58, and that's the Dow Jones. Let's go ahead and look at it right now as it's trading. It'll definitely light up when the market opens. Today's support, to stay bullish, I think we'd have to hit 29, this spot right in here. Come on. This will be your first support level at 29.62. And then your next solid support would be right here at 29.22, 23, and then bottom line, triple bottom at 28.97. And that's going to be the Dow Jones. Y'all have a great day, and we'll see you later. Retail traders.